Hello fam, my name is Brehon Mills and I'd like to welcome you back to the channel. Well, not only do we talk about great stocks, but we also talk about great books. Listen family, I hear a lot of people out here are wondering, afraid, panicking about the stock market. What's going on with the stocks? Will my stocks rebound? I've been in the red, I'm down 10, 15, 20, 25%. What should I do? Well, if you are aware of the technicals, you should have known that this type of movement in the market was coming. Because remember, if you follow this channel, we talk about technicals. We let the technicals guide us. Okay. Now, there are times where the news can change everything that's going on in the market. Some bad news could tank the market. Some great news could boost the market. But overall, 90% of the time, things move based on technicals. And always remember, 60 to 75% of all trading is done by computers, all right? Algorithms, all right? So let's take a look at the Dow Jones Index. Now, as we can see here, I have two indicators. I have the 20-day moving average and I have the MACD, all right? Simple, bare bones, simple, easy to follow indicators that will help you succeed over and over again. Now, when it comes to the 20-day moving average, stocks never move too far above or too far below the 20-day moving average. And when you take a look at this chart here, you can see it. You can see the Dow Jones Index riding along that 20-day moving average. Once it falls below the 20-day moving average, what happens is like a rubber band. It's going to snap back to that 20. And when we go above that 20, when we go above the 20, we're going to eventually get back to the 20. And so those are the things that happen when you are following the charts and you have that 20-day moving average up. Okay, so we're going to ride along the 20. We're going to move away to 20. We're going to move away. We're going to move away from the 20. We're going to fall below the 20. We're going to get back to the 20. We're going to move above the 20. And these things happen over and over again. And it never fails. All right. This is a system that never fails. And look at where we are now. Look how far we are away from the 20-day moving average. All right. So what do you think the algorithms are seeing? What do you think these computers are seeing? The computers are saying, hey, the market is oversold. All right, the market is oversold. It's time to pull back a little bit. It's time to place some sales, right? So they're selling trillions of dollars worth of stock and they're waiting for opportunities to get back in. It happens over and over again. And also, if you know how to read these candlesticks, they will tell you what's going to happen. All right, now let's take a look at the candles here. So what we have here, we have a strong uptrend, right? Strong uptrend. Then we have some settling out. Then we have this candle here. All right, do you see this candle here? All right, now this candle is what we call a shooting star. All right, it's a shooting star. So we take a look at the candle. The open was 32,928. We had a high of 33,227. Right? So we started down here. The bulls came in, pushed the price up. Right? They pushed the price up, but then the bears came roaring in. The bears came in and they pushed the price down, right? Pushed the price down. Now, if the bears had more time, this red candle could be a little bit bigger, but the market closed, all right? So what do we expect when we have such a day where the bulls just take over the day? What will we have? What will we have the next day? Continuation of that, all right? So when we see this candle here, we could expect that there's a possibility of a reversal in pattern. But what do we need to happen? The following day, we need the candle trading below the shooting star or closing below the shooting star. All right. Now, if the candle closes below this shooting star, this is a possibility of a downtrend. And it's a healthy downtrend. We need to come back down to the 20-day moving average. It's only natural. It happens time and time and time again. History repeats itself over and over again. Okay, so we should be coming back to the 20. We should have more red days ahead, and we should be prepared. Oh, the only thing we can do is sit back and chill. All right, we could sit back and chill. We could buy some put options, or we can invest in stocks that go against the Dow. So here's another stock that goes against the Dow. All right. And this is the Pro Short S&P 500, which shorts the S&P 500. So when the S&P 500 is trending down, touching the 20, so this is good because the S&P 500 actually has retraced back to its 20-day moving average. So let's see if it breaks through. More than likely it will. We see here the MACD, the momentum is leaving, and we have more movement to the downside. All right. So again, when you have these opportunities here, there are new opportunities to jump in. So maybe S&P, the Pro Share Short, may be an opportunity for you to jump in, buy some shares, make a few dollars, especially if it crosses over the 20-day moving average. We're going to jump in here, make some money, ride this thing up until we see a reversal. Okay, so we just saw the Dow Jones, the DJI. We see that's way above the 20-day moving average. So we do need some more reversal in pattern. We need that thing to come back to the 20-day moving average. The S&P 500, it is already there. So as the Dow Jones Industrial continues to retract back to that 20, we can see the SPY continue some more downward movement. All right, so there is possibly an opportunity where we could possibly get down to 380. So we're going to wait. We're going to see what happens, especially we have the crossover down here on the MACD. If the oscillator crosses over going down, that means we could have more downward movement. All right, you see the crossover here? Downward movement. Now, again, just because we have the crossover, that doesn't always mean that we will have downward movement. Sometimes we may have some sideways trading, but again, it's a negative sign for the movement or the price of the stock. All right, now that's all I have for today. The market isn't crashing yet. What we see is what we should be expecting, or we could jump into SH and make a little bit of money while everyone is panicking. All right, now that's all I have for today. I hope this video added some value to you. Now, if it did, please hit the like, hit the subscribe button. Keep coming back for more wealth building information. Peace.